We just got a slew of China data. How do you put the picture together for China?
Well, look, the data is I think the market is relieved that the numbers could have been worse. There's some numbers that look a little bit better. Of course, we have to handicap on what it means month on month. But I think it's still an economy that's really struggling a little bit for direction here. Things are not quite as bad as some of the headlines suggest. At the same time, that also means that because things are not quite as bad, there's not going to be this big bazooka stimulus, all right? So we're kind of in a fairly sub-trend growth environment, and the numbers today do not really give us a great sense of new direction. So the wait is still here. We got to see the December PMI numbers towards the end of the month. We then have the distortions from Chinese New Year. It's really only about March, April where we can really see that whether there's a new trend in the economy. So it'll be quite a while yet before I think the market gets conclusive evidence that we're back off to the races here.
Right. And I do want to get your sense in on how you're looking at the Fed's decision, or actually the lack of it, but the indication to the market for the coming year, how that translates into your outlook for Asia and Asia EMs.
Well, look, it's a huge relief if the Fed does indeed embark on an easing cycle. That's good news for Asia. That should cap the strength of the dollar, which, of course, helps Asian currencies. That in itself should bring capital flows back into the region. It allows local central banks here in Asia to also ease off the brakes and maybe cut rates at the margin. But, and this is very important, the market is putting in very aggressive assumptions about Fed rate cuts next year. And it's not clear that the Fed can really deliver the extent that's priced in. So once the market gets back to a more reasonable assumption about Fed rate cuts, that could give us a bit of volatility into 1Q. But generally speaking, the direction of travel is lower interest rates, which is good for markets. And it does mean, in particular, it should be good for Asia, especially in places where we see rate cuts coming through as well. Korea, India, Southeast Asia will all be in a position to cut rates, including, in fact, mainland China, if the Fed starts cutting interest rates in the second quarter of next year.